incredible opportunity to come and talk about what is a very, very pertinent and relevant topic right now. Because when you look at investments or you start making investments, though many of you look at past performance, but what happens from here today in the next few years will define how your investments fare. And let me put that in context of our country, and we are discussing the next 10 years of this country. We'll base it itself totally on data, and data typically does not lie. And hope I am able to make a justifiable case for probably the best country for investing at this moment in the world. Let me start. That's where it started. India is to be a very different country till the 80s. And in the 80s, we started our liberalization movement. And some of you should go to YouTube and Google a YouTube video of Dr. Manmohan Singh and post the budget, a good interview with Dr. Pranay Roy on Doordarshan. It is a 45-minute video, and you'll get a classic example of what economics is and how one changed the whole pattern of the growth of the country. Because what happened then was the government relaxed industrial regulation and rationalized the tax system, which led to this economic boom from then on. There was the oil crisis due to Iran and Iraq, and the rising import costs of oil and decreasing exports due to global recession at that point of time. Some of these led to our thoughts on the liberalization of the country. The success of the Green Revolution leading to decline of imports of growth was very critical. Grains was very critical for our country from then on. And most important, I think, relaxation of industrial controls and ease of regulation and imports was something which started in the mid-80s. Come to the 90s, and that formed the basis of what India is today, because the new industrial policy came into the place. It abolished what used to be the license Raj and led to the entry of the MRTP firms. Old policy of government approval for foreign technology was scrapped. The SLR and CRR rates were reduced, and hence interest rates were finally liberalized. When I was young, the banks used to have a fixed painted board of the interest rates, and some of you who are my age or elder to me will probably remember those days. Those days are gone. Interest rates change with the changing markets. And what was very instrumental in getting foreign companies into India was the insurance IRDA passing the bill, which sort of led to opening the doors to private and foreign entities into the country. And that has substantially changed the way India is. And add to that the disinvestment in public sector companies by floating shares, which came in the 90s and then subsequently has continued, showed a very different path to the country from then on. And post the 90s, what has happened to the country is being visible today. When you look at what's happening today, it's pretty commendable, because when you look at the growth of India, India hit its first trillion in 2006. What started in 1947 became a 1 trillion economy in 2006. Journey from 1 to 2 trillion was around 8 years. 2014, we touched 2 trillion. In 2019, we hit almost 3 trillion. And today, we are almost 4 trillion. What used to take 7-8 years, now on a trillion, we are hitting almost in 2 years or in a shorter time. But from here on, we are poised to hit 8 to 10 trillions in the next 7-8 years, and that will be the basis of my presentation. What is also very interesting to see between now and the next 2-3 years, India is probably one of those few countries which is poised for growth. Globally, China is not growing, it is actually degrowing. Japan has seen some shades of revival. Germany has seen a good comeback due to its manufacturing base. As a result, Europe is growing. And for the first time in my working life of 30 years, I am seeing Indian growth impacting global growth. That is phenomenal from our country's perspective. And then from here on, if we grow at, say, 6 to 7% a year, which looks very feasible at our present growth rate, we are poised to hit 10 trillion as an economy
by 2030. And this is just mathematics, right? Now, you and I can take a guess on whether India will grow at 6 to 7% or not. But if it grows at 6 to 7%, what is a 4 trillion economy now, in the next 6, 7 years or 8 years, will become a 10 trillion economy. We are set to double our economy in the next 8, 10 years. And there's no economy globally which is doubling in that period of time. That is where we are situated at this moment, whether in our lives, whether in the form of investments, whether in the form of job opportunities, whether it's form of business opportunities. This country is set to explode in the next 8, 10 years. It's high time we believe that. Believing that is one, internalizing is the other one. I would really request you to look at some data points from here on, which will lead to probably internalizing that amongst all of us. When you look at what brought us here, clearly, we've started living longer. We start living longer if we are healthier. In 2000, in the early 90s, our life expectations were hardly 30, 32 years, and in the 40s. Today, we are above 70 already, and we will start living longer. That has its own implications, but the point is, in our mid-age, when when we are really working, we are healthier than what we used to in the past 15, 20 years or the last 20 years is a reality. There is this access. India used to be a very poor country, but now systematically the basic needs of water, just the basic needs of gas, water, is now reaching the last mile of the country. Children are getting educated more than what they used to be in the last 10, 20 years. People in the rural areas are now converting their free time from financial well-being by starting small employment activities is a reality. Some of you who travel into the hinterland of India are seeing the villages being changed into very, very different kind of the outlook or the basic look of villages completely changed. What used to be thatched huts earlier, I don't see there are many thatched huts in India right now. And that's happened in the last 20 years. And this is the big one. Please understand that India is biometrically identified. All of us are biometrically identified. There is no country in the world with this kind of a population which is biometrically identified in the form of Aadhaar. Jan Dhan, Aadhaar, and the mobile is what we call the jam. And the jam is what changes the country from here perpetually. We are now a completely connected country. So reaching the last mile, reaching the last person in the country is a push of a button. And that's put everything into a different perspective. And add to that the continuity of the reforms. What stands out to me as is some of the reforms is the land reforms which have happened. I think the biggest reform that will hit the country in the next 15, 20 years is the boost for domestic manufacturing in the form of production-linked incentives. We had written out a note 2 years ago that if India did not shift from a service-related economy to a manufacturing-related led economy, there is that much growth for the country. And we're so happy to say that the green shoots of manufacturing are beginning to be seen thanks to the PLI introduced by this regime. Of course, the taxation reforms continue, and that leads to a different perspective on ease of business. And from an insolvency and bankruptcy code, a lot of change has happened in what is the basic pillar for business, the banking side of the business. So together, what started in the mid-80s continued its reform process in a perpetuality, which then puts this country into an engine which keeps on growing, is the simple point that I wanted to make. Now, from an infrastructure perspective, and please understand, for any business, for any economy to grow, the back-end infrastructure is most important. The metro rail expansion across cities, what's probably the biggest metro railway connectivity stands in Delhi, now is getting connected across the country. Most of the cities now have a metro plan, which then changes the way people move around within the cities. The number of airports, what used to be just 74 airports in 2014, today is 156 and counting. And some of the smaller cities have just got connected overnight. And I just came back from Jaisalmer. And there I was told that just the change in the airport and the number of aircrafts coming in now is leading to a tourism explosion. They're looking at doubling the number of hotels that are there in Jaisalmer. And that's what is happening to many cities. When I go back to my hometown, Bhubaneswar, or Odisha, we've added 2 more airports. UP now has 9 airports, I'm told. So when you look at all these, and of course the national highway is a different story altogether. Between in the last 10 years, we've seen 60% growth in the kilometers of road or the length of the road that are being built. When all these get connected, the business and the economy only thrives from there on. Goods start moving faster and more efficiently, and hence the time expectancy of businesses and the efficiencies of businesses grow. For us, we also start traveling very quickly. Some of the airports have started looking like bus stands from day one. I mean, it's just crazy to see the number of people who are flying in India is a reality which we see more often than not. Then there is this big back-end change in digitization. Mark my words when I say this, the world earlier was, kind of judged or dated by before Christ or after Christ, what we used to call BC and AD. But today the world is known for before COVID and after COVID. And what's happened during COVID on the tech end and the digitization end in India is extremely serious. The number of penetration of, say, just mobile in India and the connectivity across the country is just phenomenal. Most of the people now have a mobile. I dare say some people carry 2. In fact, the cost of mobile internet data is also gone down, and hence the number of people spending time in doing business, acquiring knowledge. Some of them are very much online for recreation also, is just growing by the day. Today, reaching anybody with any form of information across this large country, I repeat, is a push-up button. And hence, for people like us who sell investments and, 15 years ago would find it very difficult to communicate to the last city of the country, today can communicate just in a matter of an hour or so. In fact, in minutes or seconds as we speak. And for them to reach us is also just a click away. And that's forming the basis of what will become the country in the next decade or so. Add to the digitization is the change in the way payments have happened in India. There is no need for cash in India anymore. The length and breadth of the country can be paid through your mobile phone. Just look at the impact of it before COVID and after COVID. Today, hardly anybody carries cash in their pockets is something which we have seen in the last 4 or 5 years. As a result and combination of this, what is happening to the country is there is a serious change from the unorganized sector to the organized sector, both across businesses. And I'm just giving 2 examples of grocery. People have started buying. The day my wife started buying vegetables online, I realized my life had changed. It's not possible to buy it, but today everything comes home. And though I don't need anything in 7-10 minutes, but there are enough websites giving me stuff in my house in 10 to 15 minutes. That's how efficient this has become. More and more efficiency grows, more and more organized sector grows, more and more the economy starts thriving, right? Even jewelry. Today, 34% of the jewelry is now organized. What used to be completely a cash economy on the jewelry side today is slowly but surely changing hands and becoming more and more organized. You look at any sector, whether it's grocery, jewelry, healthcare, education, including consumer lending, all are getting organized and digitized. That's what has happened in the last 5 years, in a very short span of 5 years. And that's leading me to my projection of what 2030 can look like for India. Make no mistake. And somebody would have told me when I was young that India would be a bigger economy than Germany or Japan. I would have said, take a walk. We're just there. We are the 4th largest and just about to beat Germany to become the 3rd largest economy in the world. At 5.5 trillion in 2027, we will beat Germany and go ahead. Yes, that does not take away anything from the fact that China will be a 20 trillion, 25 trillion economy, and the US will be a 30 trillion economy. But fact is, we will become the third largest economy in the world in the next 2-3 years. And that, to me, is pretty staggering already. India's contribution to the world growth is now getting meaningful at 7.5%. We are a meaningful player globally. Finally, the might of India is beginning to play out globally, and it's a matter of time that some of these numbers will start reflecting across the world. It's just a matter of time. 7.5% is our contribution, and that's the trigger that will be hit by 2028, is the projection made by Jeffries. We used to be 2.7 in 2000. That's in the last 20-25 years. That's the amount of growth India has made. And let's look at some other data points. By 2030, Bangalore will be bigger than Slovakia. Hyderabad will be bigger than Morocco. Ahmedabad will be bigger than Vietnam. Delhi will be looking bigger than Philippines. And Mumbai will be bigger than Malaysia. That's how this country will look like in the form of growth. Some of our cities will start looking bigger than many countries. It already is, but these are data points which will start evolving and falling into place in the next 8-10 years. 8-10 years is not a very long time, right? And that's why this story is so special at this moment. And what used to be a very agriculture-backed economy, most of our people were employed or were earning their living through agriculture, is also changing. We feel that these shifts are structurally happening to manufacturing, to construction, to utilities and mining. Some are definitely moving to knowledge intensive services. The number of data engineers and the AI engineers India is producing by the day is staggering from a world perspective. And then that's what is changing at the bottom line. I'll add another point to this in the next slides, but please understand it is no longer just an agriculture-based economy anymore. Or bulk part of the Indians are now moving away from agriculture into other high productive and higher earning sort of work profiles going forward. And that's happening by the day. It's happening around us. Most of us see it as we speak, right? Non-farm jobs are definitely increasing every day. Now, when you look at the impact of this, what is happening is today, post-COVID again, what has happened is the impact of China in a very different way in the world. In 2018, US used to import 65% of its goods from China. In 2022, it was down to just 50%. We were 6.2% or 6.2 billion as we speak. We have gone to 7.9. The highest beneficiary has been Vietnam. But the point I'm making is with manufacturing and the change in the broad prospects of India, the scope for India in exports and manufacturing is for us to take. Yeah, we've not yet taken it, is a different story because we are yet to gain meaningful share of the supply chain moving out of China. It's moved more to Vietnam and Philippines and countries like that. But the simple point is it's a matter of time that the Indian businessmen or the Indian manufacturing will start playing out. And this place is something which you should watch out. Our house view is the next 15 years. It's a secular trend for manufacturing. We have a very interesting index, the manufacturing index. Please do check it out. And if I were to give a call today for where you should look at a structural growth in the next 10-15 years, structural secular growth is the manufacturing story of India. Please don't miss this one please do read up this and there's a big story developing here. The other part, and if you go and read the papers just before COVID, we were staring at a huge bubble in real estate. There was huge stack up of inventory, and in Mumbai, some of the flats which were going unsold were just rising by the numbers. But in COVID, something very special happened. The interest rates came down. In Maharashtra, especially, they changed the registration tax, came back from 2% to 1%. I think 1%, correct me if I'm wrong, but they halved the registration fee. As a result, what happened was all large inventory got sold out. Not only Mumbai, but across the country. That which was looming to become a big liability for the country was completely wiped out. And in today's market, the structural revival of real estate is a big story. So my first point was manufacturing. The second point which I'm making is real estate is now back, and we feel this will do this country a lot of good. That real estate is now being lapped up in pretty decent growth rate. We just read across the country, and it was written how some flat, which was an average of 7-8 crores in Gurgaon, was just lapped up in a matter of hours, one whole complex. And that's what is happening in India, in Mumbai also. Today, getting a large flat or the premium flat in Mumbai to walk in is very difficult. Most of them are already sold out. And that augurs well for the economy going forward. What's also happening at the ground level is the definite shift to renewable energy. This was very important for a country like India. The birth of wind energy or solar energy, or the mix of movement towards renewable energy, just showcases a country which is progressing or embracing the future. And this is definitely one of the big stories emerging from the country. Today, when you look at the new pillars developing, manufacturing, real estate, energy or renewable energy look very different from what it was just 5 years ago. And this is the what can I say, the item number of the presentation. Please understand, globally, 60% of world population under 30 is in India. 60% of world population under 30 is in India. That is a staggering data. When you project this 10 years later, you will have only Indians as workforce globally. And this workforce today is well educated and fairly skilled. Yes, I dare say today it's just the services side, but the manufacturing side is being built as we speak. And then let's look at some data points. And it's very interesting because by 2035, the median age of US will be 41. Japan will be 52. UK will be above 50. China will be 43 or 44. India will be 32 by 2035. That's where we stand. And that is why today India will become the hub, not only for jobs globally, but for every activity globally. There are only Indians in the world. And if this country just takes care of the health, education, and skill of the Indians, of the young Indians, the change that can happen to Indians in the world is just staggering for me to even think. 6 out of 10 people under 30 are here in the country. So just project this data. You just have to be healthy, you have to be skilled and educated. And the world is yours, is how it looks like. Unless other countries start producing at a far faster rate, which they are trying to. There are enough schemes being provided to Europeans. We come from South Korea, where there is incentive in education for the second, third child. They're trying to do that, but at this moment, we are a little ahead. And this is what will happen. And let's look at some data points, right? In 2005, 69% of Indians were considered poor. 2005. In 2018, slowly but surely, the middle class and the upper class started looking prominent. From 69% poor in 2018, we came down to 43%. But in 2030, just another 8 years or 6 years from here, 15% of our country will be considered poor. Just 15%. So it is probably the fastest wealth creating country at an individual level. Some of the wealth that is being created by Indians is pretty serious. 7% of our population will be considered seriously rich worldwide. We're already seeing some of it unfolding. But the opportunity that this part now develops in the country is just mind-blowing for me. 44 plus 34, that is 78% of this population, this large population, will be upper mid and mid class. When you have money, you don't fulfill your needs, you go and fulfill your fantasies. That is why today India stands on the cusp of probably one of the biggest upturns in consumptions globally. So I talked about manufacturing, I talked about renewable energy, I talked about real estate. I'm talking about consumption. When you look at the next 10 years, what you will see is this country moving from what used to be a low and mid level consumer to a mid and high level consumer. Today, you go to buy a car, there's a waiting for your car, right? And the top end cars are all sold out. In India, you want to buy a Rolex, it is not available. A Rolex is a 10, 15 lakh watch. You give me a Rolex, I'll buy it today, but it's not available. That's how it is positioned. Some of the expensive bags which women carry at this moment are all sold out in the country. That is where we are. And this will only grow because wealth is being created at a very brisk rate in the country. And that's what is leading to what we feel is huge change in the market cap potential. Now I'll start linking all this to our markets. Is that today, when you look at just some of the main hubs of the broad companies, we have manufacturing, we have power, we have telecom, say healthcare, mining. Between this, we have 600 large companies. By 2030, this is projected to become 1,800 companies. What is today a 3% share of global market cap? You put your upside when I'm putting this figure on this. You be the judge. I don't want to be the judge. This upside is pretty staggering because the time period is just 7, 8 years. I'm not talking about 20, 30 years at all. That is where we are positioned. And when you look at this positioning of the country, you have to look at every part. When you look at our view on the country and you look at where we stand, we feel because of this explosion across, it is great to be in funds or in portfolios which are diversified. The multi-caps, the multi-assets, the flexi-caps, all that form the core of your portfolio is back in action. And you just buy and hold it for the next 8, 10 years. I'm willing to stick my neck out and come and revise this every year. And trust me, I will not be wrong on this. In the next 10 years, the kind of wealth creation that is there in the economy is in front of you. One of the best ways to get that wealth creation into your portfolio is through the capital markets. So the key is to buy and hold and stay invested. Let me tell you, in the last 20 years of my mutual fund selling, I can safely conclude that the only person who's made money, real wealth, in mutual funds is the person who's lost his or her account statement. The person who's forgotten about these investments have made the real wealth. The moment you start watching the market is when you start tinkering. The best way to create wealth is the only thing required is discipline. It's very difficult to be disciplined because the market is very dynamic. The market poses you every day an option not to be disciplined. So people who will be disciplined in this country and stay put for the next 8, 10 years in good, strong companies stand to create fairly decent wealth is a no-brainer actually. The key is remaining invested. This story will unfold. This is data. Data does not lie. So before I end, I'm asking you a simple question. Market is at a Sensex level at 80,000. Today I'm told the Nifty crossed 25,000. Now, what will you look at? Will you look at 80,000 Sensex or will you look at India being an 8 trillion economy? Because how you look at is how you will behave when it comes to your investments. If you look at it from an 80 trillion economy, and every time we are asked, market is an all-time high. When this country is headed to 8, 10 trillion economy, there will be far many market all-time highs coming in the near future. So if you look at 80,000, you will behave very differently. You all know what I mean. If you look at 8 trillion, you will behave completely differently. So you decide what you look at. Where I've just put this slide, and in this entire process, there are enough risks that have unfolded. I used to say just a war will probably destroy everything. We are seeing wars going on for years now, right? And that has also been absorbed by us. Petrol today is 100 rupees and above. That is being absorbed by us. Go back 10 years, somebody would have told you petrol will be 100 rupees. You'll say, oh, boss, I will not buy a car. Buying cars is not stopped. Buying two-wheelers is not stopped. Our roads still remain jammed, right? The economy is moving on. Will you move with the economy and create wealth? or will you look at it from a short-term perspective, I leave on you, right? But I'll just say this, that if you stay put in any investment which is catches the broad market, you will definitely stand to create wealth and grow along with India. In 2001-2, I met a young friend. He was far younger than me. And I told him, he's a stockbroker. And he told me, just invest in India and enjoy the ride. Between 2001 and 2020, we probably met 4 or 5 times. He asked me just one thing: are you enjoying the ride? I said, yes. He says, enjoy the ride. Between here and 2030, probably this ride will even become more enjoyable. So I'll ask you the question, will you stay put and enjoy the ride? I leave that to you. But before I end, when we start investing, we think it is a process of return generation. As we mature, we realize that it is a process of risk mitigation. The closer your investment or your portfolio is to your risk profile, the better the investment journey is. Risk profile knowing is very important. So I would really request you to dig deep inside yourself and be truthful yourself. Every risk profile is correct. And from a risk perspective, I'll leave you behind with some thoughts, because there is a risk to investing. There is a risk to not investing as well. There is a risk to investing in equities. There is a risk to not investing in equities as well. There is a risk to investing in India. Today, the risk to not investing in India is substantially higher. People who do not invest in India will definitely have a very different approach on their portfolio or their wealth creation if they don't. That's where we stand. There is nothing called risk-free investing. It is very important to be comfortable with the risks associated with whatever investment you do and choose wisely. At this moment, I would definitely recommend choosing India very, very wisely, and wish you all very happy investing, and please enjoy the ride of this great country called India. Thank you so much, and I am open to questions. Thank you, Mr. Patel. Are there any questions I can take? Thank you, Mr. Ravi Shankar. Thank you, Diveshji. This is a very interesting question. My favorite question. Let me answer it. Somebody asked a question. Mr. Debjyoti is asking, what about defense? It's my favorite question right now. Please understand, this whole story of defense started in the last budget, when the government allocated a fairly substantial amount to defense. We've just come out of a budget which did not utter 2 words, defense and PSU. Please think about it. When you look at investing, my personal opinion is your future allocation should be inversely proportional to the near-term performance. The higher the near-term performance, say the last year performance, the higher the last 1 year performance, the less the money to that part. So think about it. So today, if you want to buy something which has performed very well, please understand that performance is for people who were invested there. People who come in now may not have that performance. I'll give you a small example. Typically from an industry data, in the last 2 years, 40-45% of the money we've been getting is in the small cap segment. I've got nothing for or nothing against small caps. It's just that allocation is key. You make money by allocation, you destroy money by over allocation. 45% was a lot, and hence, if you see the last 6 months, mid caps are outperforming. So please, there is that much weightage you should give to past performance, and hence you have to really look at your allocation in sectors like defense and all. These can be very, very cyclical. I was asked top 5 sectors of ours. We feel the top 5 sectors are manufacturing, private banking, healthcare, consumption, definitely. So stay put in these segments, and the future looks extremely good. The other question is, any other question?
Maybe how will the middle class people benefit by this growth?
Yeah, I mean, see, I think the biggest beneficiary that is coming to India is people now structurally going out from what we used to be called lower class to now middle class and upper middle class. But it's not about what you earn; it's about what you make with that money. When you look at country, see, I gave you one slide where people have started living very longer now. Now, when you look at living longer, and India today does not have social security and the pension system is being disintegrated, some of you have to really think. I think the biggest ticking bomb in India is retirement. And the need for investing has to be felt at a very young age. It is never about how much you earned, it is always about how much you invested and created wealth for those days when you don't have an income. So please take a very serious look, because we're going to live longer. The medical requirements will be only more expensive. So think about, please, preparing and planning for your future. I did, Chandni madam, I did talk about my favorite 5 sectors, and our 5 sectors are manufacturing. Somebody asked about EV. We feel EV and is definitely beginning. Give it 5-10 years, you will see a very different kind of environment. So if you want to get into EV early, we have a very good index. Please just Google us, but in these long-term structural themes or structures, you need to be invested. The 5 sectors, coming back to my five themes, not sectors exactly, is that manufacturing, private banking, consumption, healthcare. Though there is a debate on IT right now between ourselves, my personal call is some of the IT companies are available at very good prices. If I'm doing personally, I'll make a disclaimer here, is that I'm making a 12-month SIP in an IT fund. We don't have an IT fund, so you can check a good IT fund in the market. Yes, it is EV and AI. That's the back end of what can be the future. So some of you who are interested in those kind of futuristic outlooks, then there are enough products. We also have a product. Please do Google. And then my humble request is, have some patience with these products. And in the long run, on an 8-10 year horizon, you will definitely stand to gain a lot from the growth of these sectors or these exciting themes as they unfold.
Your views on artificial intelligence?
Yeah, I mean, somebody rightfully asked that. Yeah, so exactly, Diveshji is saying that is not good, too early for returns to come. The EV environment is just started. The reason you invest in these themes early is that then when it starts taking that J curve, you start benefiting them. If I knew which was the best time, then I wouldn't be a salaried income. I would be doing that professionally, right? You never know. But the fact is, this environment is moving towards an EV environment. Today, fact is, some of the largest EV manufacturers are selling the number of vehicles they can produce. There is no inventory in EV in this country. The other part is AI. AI to me is now core to every business. Any business which is not adapting AI will perish. Absolutely no business. So going forward, when you look at the development of AI and us forming portfolios of AI, it will look like a very diversified portfolio. Something, I'll give an example. Say in 2000, early 2000, there were these technology funds. And in 2001 or 2, one of the leading private banks was taken by a tech fund. And people question them, that's a bank. Why are you taking them in a tech portfolio? That fund had written out a note that banking is technology. Banking is no longer brick and mortar. Today, fact is, Banking today is more tech. How many of you actually visit the bank? Most of the transaction is done online, right? During COVID, it was an online environment. So definitely it was today banking and payments are a tech game. Similarly, most businesses will be AI enabled. So when you look at, say, 10 years from now, AI will be a core part of your portfolio. See, a very interesting question. I'd like to answer that of Chandni Madam. Can you invest in thematic funds? See, when you form a portfolio is of two parts: the core part of your portfolio and the satellite part of your portfolio. The core part of your portfolio forms the bulk of your basic returns, right? That part should completely align to your risk profile. The core part should be formed of solid, strong companies, namely large companies and some large mid companies, nothing more than that, right? Then, after you form the core part of the portfolio, you go to the satellite part of the portfolio. The satellite part of the portfolio should have interesting ideas at a higher risk to enhance your return. What is that core versus satellite? I would request you to have that discussion with your advisor, distributor, Access Securities, and take a call on that. But thematic funds form the satellite part of your portfolio. Some themes are secular. Say, look at our consumption fund. It's the 16 years of consumption in India. And if you see my presentation, I'm saying consumption is getting re-rated. It is moving from low and mid to mid and high level consumption. So the consumption is a perpetual story. Those themes are very different and carry a good risk reward compared to, say, defense, which is not exactly a theme to me. It's a sector, if you ask me. In the garb of a theme, they can be very cyclical and can have very different ups and downs in the market. So please, suppose healthcare. Healthcare is just beginning to unfold in India. And post-COVID, the importance of healthcare has become very different. Sadly, it needed a healthcare to COVID to give us the importance of healthcare in our lives. But fact is, today from here on, healthcare for the next 10 years looks extremely good and will continuously grow. For some reason, some large great IT companies are available at very good prices at this moment. Hence, technology becomes the next 8-10 year buy. And you tell me if anything can work without tech. Now, tech is the basis, AI is the future. What is the mix? You have to decide. Yeah, very interesting. What is the difference between theme and sector? A theme is a broad theme. A sector is a subset of a theme. Say, let me tell you a good example. When we started, say, healthcare 5 years ago or 4 years ago, it was primarily pharma. Pharma is a part of healthcare. Healthcare is a broad umbrella which encompasses pharma, insurance, you can say pharmacies or health outfits. They start then hospitals. They become part of pharma, healthcare. Say banking and financial is the theme. Under that will be banks, NBFC. Now, bank itself is divided into PSU bank, private banks. Some of them run PSU bank as a sector, some run private bank as a sector. But bank is a sector. Banking and financial is the theme, right? Consumption is a broad theme. FMCG is a sector. So a sector is a subset of a theme. A theme is a broader umbrella. So themes are perpetual. Sectors are cyclical. Sectors are far more, what can I say, riskier than.
The Access team and your esteemed clients. Maybe for the want of time, we would not take any other questions. So, Dhiren, Aditya, anything from your end? So, firstly, thank you, Swarup sir, for